Hello everyone, investment scams rampant. Please vigilant and discerning. Do not trust information from unknown sources. Please make sure to recognize 2 official Capital Securities community, Facebook, Capital Securities, YouTube, Capital Wealth Insights.
Hello, Tony Dong Jiaching. Begin tonight's group discussion. Good evening. First, let's talk about today's 2 main topics. We still need to discuss Trump and last week's Federal Reserve interest rate decision. Actually, most of the weekend news revolved around Trump, his meeting with Viktor Orban, and then he stirred things up again with the H-1B issue. So let's take a look at what's going on there. As for the Federal Reserve, we need to pay attention to how the market is reacting. The stock market is once again moving out of sync, and people are actually a bit confused. We'll provide some additional thoughts on the outlook going forward, especially our views on the stock market. First, regarding the Trump-related talks, on Friday night, around 8 p.m., the 2 Trump-related figures from the mainland started their phone call. It was originally scheduled for 9 p.m., but they actually started an hour earlier, at 8. I think this is actually a good thing. Because at least by starting early, everyone is ready and can get to the discussion sooner. The 2 sides talked for quite a long time, almost 2 hours. If you subtract the time spent on translation, since formal talks like this don't use a common language, they don't use English or any shared language, and there's always a Chinese interpreter because these are official talks. So if you cut out the translation time, the actual conversation lasted about an hour. For a dialogue at the head of state level, that's not short at all. We'll take a look at the results of their discussion in a moment. As for Trump, he was very pleased with the outcome. In fact, yesterday, on Friday, Trump was in extremely high spirits. He was just really happy and excited to announce some things. He said that on Friday. He felt that with China, there was some progress on the TikTok agreement. We'll add more details about the TikTok part in a bit. In addition, the 2 have confirmed that they will meet, which should refer to a meeting at the APEC summit. This APEC meeting will be held at the end of October in South Korea, so the 2 are likely to meet there. However, on other issues, the timeline might still be a bit slower than everyone expects. He said they discussed trade decoupling, ending the Russia-Ukraine war, and the approval of the TITAC agreement. But in reality, the only concrete evidence we've seen so far is that there are some details about the PTTAC that have started to be released. They may have discussed the other 3 topics, but not in much depth. Trump also mentioned that he plans to visit China at the beginning of 2026. We want to point out this particular timing to everyone. If the meeting happens at the end of October, then of course November and December. Well, the thing is, from the end of November, which is Thanksgiving, to Christmas, there usually aren't any formal negotiations in the US during that period. Then, starting from about the 2nd week of February next year, China will enter the pre-Chinese New Year atmosphere. So, basically, the window is limited to early next year, around January, for any interview plans. Here, we want to remind everyone again about the timeliness of this matter. As for the question about Trump, there will be the midterm elections in November next year, so it's best to finalize this deal before the Lunar New Year. It needs to be announced, and there should be an official state visit and a signing, only then will it be a real deal. Why is this timing being especially emphasized for everyone? It's because any policy, once signed, will take about 3 months before its effects start to show. If it really is the kind of good deal Trump talks about, you need to let the dust settle and give it time for the benefits to become apparent. If the election is in November, you'll want to see some numbers or noticeable improvements by mid-year. That means you need to lock things in before the Lunar New Year, and then, after the holiday, gradually roll things out. This timing is crucial for things to go smoothly. In addition, regarding TikTok, the most important issue is the algorithm. Starting from the weekend, Saturday, Sunday, and into Monday, there have been some details gradually coming out, though not fully disclosed yet. I'll provide an update for everyone in a moment. The White House press secretary, Karine Jean-Pierre, said that the TikTok business will be controlled by a majority of Americans. That means there will be a 7-member board, and during this period, 6 of the board members will be Americans. The other board member will be from TikTok's original parent company, which is Douyin, specifically Zhou Shouzi from Singapore. He will be on the board, but he will not participate in any management related to cybersecurity. So, he will just be a regular board member. This is part of their plan. However, as we see in the next part, China keeps insisting that it won't sell its algorithm, which makes things more interesting. So how exactly will this be structured? According to the latest information, a new entity will be established, with ByteDance holding no more than 20% of the shares, and Oracle and Andreessen Horowitz involved as well. This company, along with Sequoia Capital, Silver Lake, and Silver Lake Capital, will be the main investors. So, as I mentioned before in an in-person seminar, when Oracle first announced that $300 billion RPO, that is, the news about their backlog of unfulfilled orders, the stock jumped 38% the next day, and we happened to go and do. During the seminar, I talked with everyone, and while everyone was focused on OpenAI, what I was thinking about was TikTok. Sure enough, this happened right away. If TikTok really ends up being operated by Oracle, Oracle will get a huge boost. This is extremely, extremely important. In addition, Oracle has always been the manager of TikTok in the US. There's something called the Texas Project, actually, TikTok's operations in the US. The database has always been managed by Oracle, and now this is going to be an even deeper collaboration. So, this is the news that came out today. TikTok will recreate a new algorithm specifically for the US version and provide security guarantees, thereby addressing Washington's concerns. This move addresses the concerns of lawmakers, and the algorithm will essentially be leased to TikTok, that is, the Chinese TikTok. In fact, it's ByteDance, a Chinese company, that operates its international business through a Singapore-based subsidiary. They will repackage the US algorithm. I also heard another version, which is that ByteDance will set up a new company in the US, meaning TikTok US and TikTok Global will be handled separately. In China, they've always been separate anyway. Over there, it's called Douyin. This algorithm is being redesigned from scratch. Oracle will retrain this algorithm. Now, you might wonder, why does an algorithm need to be trained? Isn't training something that's only done with artificial intelligence? So let me clarify this for everyone. It's important to note that previously, there was a major $30 billion deal between OpenAI and Oracle, which allowed its stock price jumped 36%. We should especially keep in mind that, in my opinion, OpenAI likely plays a role in the operations behind this. So, let's see in the future whether this model will take shape and develop in this direction. The most important thing is that this is separated, so for China. For China, the algorithm itself is not for sale, so you would have to retrain it yourself. This makes things a bit more interesting. But this also brings up a few more detailed issues. For example, if the algorithm is reconfigured, will it end up with some of the same problems that American social media platforms are currently criticized for? For instance, the first issue is That is, will there be issues with content censorship? Will there be excessive marketing? Another key point is whether the news coverage will be filtered. For example, will they simply not show you anything about what's happening in Gaza? So why is TikTok so popular right now? It's because it hardly has any of the leaks or issues that some American apps have. But after retraining, will those old problems come back? We don't know. At least for now, as of yesterday, Friday. Here, we can see that the announcement regarding ByteDance's handling of this issue does show some progress. In fact, this part looks like it will probably be the first to actually get signed and implemented. This is a significant step forward. So, the whole trade agreement, well, not exactly a trade agreement, but the negotiations between the US and China seem to be making some progress. Next, what we have here is basically a statement of the Chinese side's position. The Chinese position, as usual, is very steady and measured, sticking to the kind of official response that China always gives. Honestly, it's pretty boring. The key points are vague and hidden in the details. Here, they say that China respects the opinions of enterprises, but everything must comply with Chinese laws and regulations, balancing interests. So, it looks like China has gotten what it wanted. The algorithm won't be completely sold off. They just won't let it be sold. If you want a new one, they'll create one according to your requirements. Also, in this announcement, the Chinese side mentioned that both parties are being pragmatic and proactive. It's important to understand that as long as nothing is, being pragmatic is good. Candid in international diplomacy usually means two sides arguing, exchanging sharp words. But if they use pragmatic and proactive, that's more positive. So, everyone thought after this Trump-Xi phone call, there'd be a meeting and they'd quickly reach a conclusion. But looking at it now, things aren't going smoothly. Still, it's not particularly bad. The key point is, after this call, it's basically confirmed that they'll meet at the end of October, and after that, officials from both sides will probably keep meeting to discuss things. The main point is that if Trump is planning to visit China early next year, I think before the Lunar New Year would be best. After the Lunar New Year, it wouldn't be as ideal. If that's the case, then we can expect the US-China trade negotiations to develop in a more positive direction. This is very important for Trump because he needs to score points right now, and China is a crucial breakthrough opportunity for him. The announcement also added that Xi Jinping hopes the US will provide an open, fair, and non-discriminatory business environment for Chinese companies investing in the US. So this is also a form of protest, and it likely involves the idea that the things the US sells to China should be treated the same way, meaning the issue of restrictions is also included here. Overall, what I see here is that both sides, the US and China, are still negotiating. It's like the hashtag and the asterisk under it. The tariff truce agreement is still ongoing until November, for 11 months. I want to point out to everyone that I was actually surprised by this round of talks, because if you look at the content, it was almost only about one thing. Aside from TikTok, other topics were discussed, but not as in-depth. Especially regarding tariffs, it seems like the truce will continue and negotiations will go on. It feels like there are still a lot of details both sides need to work out. As for the negotiations, another issue that actually has some time pressure is surprisingly the lack of discussion about soybean purchases. The main reason is that earlier this year, China didn't buy from the US, so the warehouses are full and there's a bumper soybean harvest in the fields, you know? So your warehouses are full, and there are soybeans. Whether you want to harvest them or not, you have to. Otherwise, if you let them rot, you have to harvest them. You can't let them. If you just leave them there to rot and don't harvest them, you have to harvest them first. Otherwise, there will be problems with pests and diseases, which will be even more troublesome. So for American soybean farmers, what's the biggest pressure? It's that after dealing with things this way this year, next year, right now, you don't even know how to harvest, and even after you do, even if there are subsidies. One question is, how should we plant next year? American soybean farmers are thinking about this. The pressure feels heavier now, but a representative from the American Soybean Association made a statement. He said the soybean season is already in harvest, and it's rare that export orders are at zero. Why? China bought from Brazil instead. He said there's a seasonal factor, so sales and logistics need to be planned in advance. If they keep delaying, then in January and February next year, soybeans in Brazil and the rest of South America's southern hemisphere will be ready for harvest. If they keep buying Brazilian soybeans, American soybean farmers might just faint in their fields. This would be a huge blow to American soybean farmers. So, it's surprising that at this point, during harvest season, they didn't negotiate. In addition, the price of American soybeans is about 20% higher than South American soybeans, mainly because of tariffs. But when it comes to this, American soybean farmers will probably have to face the pressure of selling at lower prices to compete. That's also a significant challenge. Additionally, if we look at the market from 2023 to 2024, that is, from September 2023 to the end of August 2024, the U.S. exported nearly 25 million tons of soybeans to China, while exports to the EU were only 4.9 million tons. That's a huge difference. So when you see these numbers, you can pretty much understand that for American soybean farmers, the Chinese market is absolutely indispensable. But what's strange is that Trump didn't even bring this up this time, even though the votes of American farmers are very important to him and to the Republican Party. That's why I'm a bit puzzled as to why he didn't talk about it this time. So, when it comes to the Trump-Xi meeting, this is one of the more confusing aspects. As for some of the data released in China regarding rare earth magnets, that is, the rare earth sector, U.S. exports dropped 5% month-on-month, but total volume actually increased. Exports to Europe, Japan, and other countries went up, but exports to the U.S. decreased. This signals a soft surface but tough underneath. Both sides are still wrestling here. On another note, there's some relatively good news. A delegation of U.S. House representatives from Washington visited China. This is the first time in 6 years that the House has sent a delegation to China. Previously, in October 2023, it was the Senate that visited China, led by Chuck Schumer, a veteran Democratic senator who brought a bipartisan delegation. This whole series of events actually shows signs of gradual improvement. So, from our perspective, the best outcome for U.S.-China trade would be for them to reach an agreement. Why do we keep talking about a trade agreement? Because for Taiwan or for the global economy, trade is still very important, especially for Taiwan as an export-oriented economy. If U.S.-China talks don't go well, there will probably be some negative impacts. That's basically the part about the conversation between Trump and Xi Jinping. Next, let's look at the H-1B visa. First, we need to mention that when Trump brought up this visa, he first announced his so-called Trump Gold Card. With this, for $100, you could obtain permanent residency status. Then he said he would introduce a Platinum Card, which you can get for $5 million. And the conditions for this are even more generous than the Gold Card. At the same time, there's also the first option. With $2 million, you can apply for U.S. residency for your employees. Now, there isn't a specific limit mentioned here, but by this point, you can pretty much see what Trump's intention is. Let's pause here in the middle and talk about his intention. First, he wants rich people, super rich people, those with $1 million or $5 million, these kinds of amounts. Then third, he wants $2 million. What does this mean? This is basically for some high-level managers. To give an extreme example, let's say one day TSMC or Intel really needs to transfer their process technology, and they have to bring TSMC engineers over. Would they be willing to spend $2 million on top of the engineers' salaries to bring them over? That's basically what he means. But the problem is, everyone is looking at the next part because the number of people in this next group is huge. Trump is pushing the H-1B program and wants to raise the application fee to $100,000 to curb the abuse of this visa program. Actually, you can see that for high-level tech companies, this already caused chaos that day. Later, the White House clarified that this isn't for both new and existing visas. It's only for new visa applications that they'll charge this $100,000 fee. The main reason is that this year, the job market for STEM graduates in the US isn't good. So Trump is using this approach to try to control the situation, basically hoping to create more job opportunities for American workers. Some local people, but I want to tell you that this may still be very bad because I can be sure of one thing, all the viewers or listeners, I am included in it. I will tell you again that your English must be better than Americans' math. You heard it right, your English must be better than Americans' math. I don't know how good your English is, but I am very sure that American math is terrible. I am very sure of this because when I was studying there, we knew some college students and helped them teach their classmates some calculus. Your math may be worse than our junior high school students. You have already gone to college, and you are still studying in a science and engineering school. Then think about other general ones. They are so bad. So after you come up with this problem, we see an immediate problem. We have a table below with about several major ones. The application situation of each company is particularly exaggerated. Amazon has more than 10,000 people and 10,000 H-1B talents. In addition, Microsoft, Facebook, Apple, and Google also have about 5,000 people, which is a relatively large number. India accounts for 70% to 73% of the H-1B usage. I saw another number of 76%. I think India's usage ratio is also related to China, because China may have been relatively high in the past, 10% to 15%, but in recent years, after China began to be picky, the number of people has begun to decrease. Even if there are fewer people, the work still needs someone to do it, so it goes to the Indians. Then I want to tell you that this H-1B thing may have a very short impact on the stock market. People will react in 1 or 2 days and it will be fine. But we have to talk about this person. This $100,000 H-1B policy will have a long-term impact on the United States. Why? Because you see, the H-1B is for so-called entry-level employees, and now you need to pay $100,000 to hire one. In principle, that means unless this person is a genius, you just won't hire them. If you don't hire them, that person will leave and go work somewhere else. Whether they go back to the US or China, that's a minor issue. The main thing is Canada is proactive. These big tech companies are reaching out saying, send your people. We have subsidy programs. The visa process is straightforward. The US and Canada are in almost the same time zone. The time zones overlap. If you're a software engineer, there's not much difference between working in the US and working in Canada. So in the end, it's quite possible that Canada's service industry will take off and its manufacturing will flow back to the US. But after all Trump's effort, any real benefit? Why? Because of this movement of people, your English is definitely better than Americans' math skills. So if that's the case, talent will become a big problem for the US. Right now, you might not see the issue in the short term, but in the longer run, maybe 5 years from now, you'll start to see a lot of problems emerging in the US. This is actually a really bad winning strategy. I want to add something for everyone. An update from the same scene. The US government is about to shut down again. Didn't they pass the debt ceiling and the big, impressive bill? Wasn't everything settled? So how could this still be happening? Honestly, I'm surprised too, but it looks like there's pressure. Once again, a temporary funding bill has gotten stuck, and Republican and Democratic proposals have been rejected, so this part is really bad. But what's even worse is that the Senate is going on recess for a week. They won't be back on Capitol Hill to vote again until September 29th. This situation is honestly just speechless. Trump is being pragmatic here. He's predicted, as he said, the federal government is likely to shut down in October. So I didn't list this as an immediate chaos reason, because there's still time to negotiate and compromise. Basically, within the Republican Party, either the establishment, Trump, or the Democrats compromise. As long as someone compromises, the problem gets solved. If no one is willing to compromise, the government may shut down for a few days. But I don't think it'll drag on too long. It's just a really crappy situation to have happened. For things like gold or anything that benefits from the downside or dark side of the US dollar, basically the worse and more chaotic things get in America, the better it is for these kinds of assets. They'll have more opportunities. Also, right now we're talking about the discord within the Federal Reserve, so let's not get into that for now. As for what was said at the post-meeting press conference, we won't discuss that either, since it's already Monday now and that was last week. Let's discuss Thursday afternoon and why the market still finds this time chaotic. There was a surprising twist. On one hand, they're raising economic growth forecasts, and on the other, cutting interest rates. If you look, you'll see they've revised up economic growth rates for this year, next year, and the year after. Logically, if economic growth is revised upward, why cut rates now? Of course, that's Trump's way of putting it, oh sorry, I meant Powell. The way of putting it is that the management is a preemptive rate cut. I believe when we look at the attitudes of the Fed officials in a moment, we'll see this. So here's a key point. You can see that next year's PCE number rises from 2.4 to 2.6. This is an upward adjustment. What does this reflect? It reflects that the room for rate cuts is being squeezed. This will make the reaction in the bond market different from that in the stock market. Also, their inflation target is a bit ironic. What they're saying is that it's gone from 2.0 to 2.8, meaning they're no longer pursuing that ideal inflation target of 2.0. They very pragmatically raised the target to 2.8. This corresponds to what we'll see in a moment from statements of other committee members, which also echo this point. Regarding Fed's upward revision of its economic growth forecast, let's take a look. First box, gray represents last time, and blue represents. One member supports a rate hike, 6 say no need to cut rates, 2 suggest a 0.25% cut. 9 propose a 0.5% cut, and 1 wants a 1.25% cut. That last one is Milan. Another key point we need to mention is that, although the median suggests a 2 rate cut scenario with 9 members supporting it, we also see that 6 members are in the camp of not needing any further rate cuts, which is quite a significant number. If you compare this to the market and the general media sentiment, it's actually quite different. Some people believe that after 1 rate cut, there's no need for more, and I think their reasoning is more or less related to inflation. So this is something we need to pay attention to. Also, for 2026 and 2027, there's only a single rate cut projected for each year. What I want to say here is that, in my opinion, it's a bit too early to make any firm predictions right now. Why? Because if you look at the distribution of the committee members' projections, it's actually very scattered and not concentrated at all. It will take time for these views to gradually converge. But if we just look at the median, saying that there will only be one rate cut next year is actually a bit conservative. Although, when we look at 2026, most projections suggest that after 2 rate cuts, rates will basically stay put. As for the year after next, there will likely still be room for further rate cuts. But we need to point out that this rate-cutting cycle is shorter than a typical cycle, and the space for rate cuts is also more limited. After the announcement, U.S. Treasury yields rose across the board. We especially want to point out that the increase was more pronounced for bonds with maturities beyond 2 years. Technically, a 1-year bond is called a note, and anything less than a year is called a bill. If we strictly define it, bonds with maturities over 2 years are considered true bonds. But if you look at the yields for bonds with maturities over 2 years, they all rebounded, at least from Wednesday afternoon after the announcement through Thursday and Friday, yields were all rebounding. Today, things are a bit different, but to sum up this part, why is the bond market still in turmoil? It's because there isn't much room for rate cuts. So, the crisis of yields hitting new lows in the US has been temporarily resolved, and there's been a rebound. However, because the Fed doesn't have much room to cut rates, yields on bonds with maturities over 2 years have rebounded. We especially want to talk about the stock market. We've mentioned before the so-called deep water period for interest rate cuts, which basically refers to the situation where the benchmark interest rate minus the inflation rate is at a certain level. Let's compare. If the benchmark rate drops to 4 to 4.25, and the expected inflation rate at the end of this year is around 3, let's say 3.1, and next year it's 2.6, then there's still room for rate cuts. But the problem is, once the rate gets close to the inflation rate, the more academic types will tell you, I need to observe further to see if inflation is still coming down, or to see whether the economy can hold up or not. Only if the economy really can't hold up will they cut rates again. So, before we reach the deep water zone, since there are still expectations for rate cuts, I think stock market investors will generally have a positive attitude toward rate cuts. But as we approach the deep water zone, you'll need to watch how the new Fed chair, governors, and the structure of the regional banks are set up. However, the key point, in my opinion, is still Trump's attitude. His stance is basically that he doesn't care about inflation, he just wants low interest rates. Because he wants low rates, that's actually the main reason why stock market investors seem so calm and confident right now. As for this, we need to see whether it will actually be implemented. The first thing to watch is inflation. If inflation really doesn't go down, then even if he wants to push through with it, there will be a huge backlash. The second thing is still the personnel structure. If the people in place are more likely to listen to him, then rate cuts will happen. If things are still rigid, there's limited room for rate cuts, so the market will be disappointed. Just a reminder, as for the probability of a rate cut, the chance of a cut in October isn't even a quarter point, but I think it's pretty close. I think this year, quarter point cuts October, December highest. As cuts continue, I think there will probably be more cuts in January and March next year, and after about April, we'll be entering deeper waters. By then, rates will be around 3.31 to 3.2 or so. At that point, it'll be close to what the Fed considers its target range, so we'll see where inflation stands. After June, we'll be in deep water. How much further rates can be cut? Whether cuts continue will depend on the new Fed chair. Before Powell steps down, he'll probably keep cutting by a quarter point, gradually bringing rates down. Let's look at how market is performing. The US dollar has managed to resolve the crisis of breaking below its support and has rebounded. But if you look at the chart here, it still looks okay. However, I just checked the price and it has pulled back a bit. As interest rates fall, the dollar also falls. Interest rates are showing a similar pattern. On Friday, there was still a rebound, but if you look here, the 2-year yield rebounded up to about the 21-day moving average and then faced resistance and started to move down. The 10-year yield is showing a similar situation. There's a rebound followed by a pullback. For now, we still need to look at the upcoming financial data to determine whether there will be a continued rebound. But I think there's a tendency here suggesting that the US dollar and US interest rates probably won't bottom out just yet, unless new data comes out to provide a fresh driving force. As for the officials, Kashkari from the Federal Reserve doesn't have voting rights this year. He supports the decision to cut interest rates and said he also believes there will be 2 more rate cuts this year. In addition, he raised his estimate of the risk-neutral interest rate to 3.1%. The neutral rate is actually linked to the inflation expectations we just mentioned. Raising it to 3.1% basically means that rate cuts could go down to 3.1%. As for Daley, she also doesn't have voting rights this year. She had them last year, but won't have them again until the year after next. Her statement was that the purpose of rate cuts is to support the labor market, which is a relatively dovish stance. Also, Fed's Mester gave an interview. She said that since the FOMC meeting, she hasn't talked to Trump, nor has she made any promises to Trump about how she would vote. She also mentioned that at the bottom of the 150-point range, that's her own projection. The problem is, she still hasn't resigned from her role as a White House economic advisor. Technically, she's on unpaid leave, but the issue is that people criticize her for still having the authority to go back to the White House and meet with Trump. When it comes to maintaining the Fed's independence, Americans are actually very particular about this, so she often gets criticized for it. In addition, U.S. Chief Justice John Roberts mentioned that Lisa Cook needs to hurry up and respond to the dismissal before September 25th. But I think Lisa Cook will probably take a passive approach to this. Anyway, since there's an appeal to the court will handle it. So she'll just wait for the court's decision. In addition, a former Federal Reserve official, Blood, commented, "Sorry, this is from last week. He doesn't support the Fed's decision to cut rates by 50 basis points at once. He said that if they cut by 25 basis points this week and another 25 in October, the effect would be just as good as a single 50-point cut." Since he's a former Fed official, what he said probably reflects the sentiments of many officials. I think this part is pretty interesting, but I want to mention something here. Although he is seen as a potential candidate for the next Fed chair, I actually think his chances have decreased because it seems like, recently, Trump has been letting others make the decisions, leaving the choice of the next candidate up to those he promotes. If someone promoted by Trump gets pushed up and everyone supports Trump's pick in the final decision, Trump probably just wants someone who will toe the line, but James Blatt isn't really that type. he's actually known for being outspoken. So unless Trump is willing to break the mold and negotiate with him, I think the chances of Blatt being chosen have dropped even further. As for crude oil, this week, on Monday, crude oil prices looked like they would go up in pre-market trading and in the afternoon, but later they seemed to fall. The main reason is the EU plans to increase sanctions on Russian oil, and Ukraine attacked Russian oil facilities. So on Monday afternoon, the price rebounded. As for spot gold, it's been very strong. I just checked today and saw that the gains have widened. I think this mainly reflects the policy path I mentioned. There's still room for interest rate cuts this year, and possibly even into next year. So gold is reacting quite positively. But everyone should be cautious here, as the volatility is a bit high. For Bitcoin, on Monday it continued to fall after dropping on Friday and Saturday. It went up on Sunday, but both Sunday and Monday saw declines, especially since, as we'll see in a moment, the drop has intensified. I saw some news that last Friday, should be Friday morning, the CEO of MicroStrategy said that Bitcoin's most exciting moments are over. But the most important thing here is that on Monday, the crypto market saw $1.5 billion in long positions forcibly liquidated. When you see forced liquidations, it means people are cutting their positions, and when positions are cut, prices are bound to fall. So, there's been some selling pressure here. The impact is bigger on smaller currencies. For example, the first blue one, ETH, Ethereum, dropped 7.5%. Bitcoin fell, no small drop, over 2%. Here, we want to point out that there was a very unexpected sell-off after the forced liquidations. But you need to pay attention. If that's the case, Bitcoin's volatility might increase in the near future. Please pay attention. The most important corporate earnings report this week is Micron, highlighted in red, which announces its results after market close Tuesday. Auto parts company AutoZone will report, as will electronics EMS company Jabil. Used car dealer CarMax will also announce earnings, and for us in Taiwan, the very familiar Costco releases its earnings after market close Thursday. There aren't many earnings reports this week, and even fewer next week because next, we'll have to wait until October 2nd or October 5th when the U.S. earnings season kicks off. Everyone should pay attention to this. Federal Reserve this week, main economic data concentrates on the 23rd, 24th, and 25th. On the 23rd, preliminary PMI figures. More importantly, on the 24th, revised Q2 GDP. Even as a revision, it could still attract significant market attention. A key point, the U.S. goods trade balance, whether U.S. trade is recovering and stabilizing, significant. Durable goods orders, and unemployment benefit applications. Friday's key data, the PCE figure, core PCE data. Also, the University of Michigan Consumer Sentiment Index. This week, because the Federal Reserve held the FOMC meeting last week, many officials haven't spoken for almost 2 weeks, so there will be a lot of speeches from officials this week. You can see there are a ton of names. The most important is Chairman Powell. He speaks just after midnight Wednesday, and I think that's the main focus. Even with many speakers, the chairman's words matter most. What he says is still most important. Also, note the repeated names and many names in general. This week, speeches from Federal Reserve officials are nonstop. Also, just to add, Trump previously mentioned that the financial reporting system should be changed to semi-annual reports. Of course, the SEC, with his appointee in charge, immediately followed suit and said they wanted to revise the disclosure rules. But what's funny is that Atkins let something slip in his next sentence. He said investors rely more on earnings call conferences to get information rather than on written reports. But the problem is, if you don't publish written reports, then what are you supposed to talk about in the earnings call? Now, will they relax the rules? I don't know. But for more loyal, higher quality companies, they'll still stick to quarterly reports. Publishing quarterly reports is a long-standing U.S. practice, and there's no need to change it unless there's a good reason. Trump doesn't think that way. He likes changes, so he'll change it. Even so, most companies will release quarterly financials. Maybe they'll report numbers based on when the quarter ends, but they'll still publish them. We can revisit that later. On Friday, we saw the S&P wink with thumb sticking out continue to rise. Since we're short on time today, we didn't go into much detail about the changes in different stock market sectors. I'll mention it briefly in a moment, but starting tomorrow, we'll talk more about the shifts in various stock market groups, the changes in their strength, and the shifting focus within the market. On our side, the S&P is rising, and volatility continues to drop and hover at low levels, which is a good sign. But if you look at the flow of funds, there's been a squeeze. Tech stocks have basically sucked up all the money. That's why, on Friday, the equal weight index actually went down, with a lot of money flowing into tech stocks. Looking at the 11 major sectors in the RRG, which is a chart of sector rotation, we can see that there's really only one bright spot. The red area is developing from the upper left to the lower right, indicating a strengthening momentum and price. Meanwhile, you've seen other stocks falling. The main reason we've noticed is that information technology stocks are once again dominating U.S. performance. This isn't surprising. Look at who's in there: Nvidia, Intel, Palantir, and Apple. Apple has a new phone coming out, so it's stronger. Microsoft is a bit weaker, but a collaboration between Nvidia and Intel last Thursday sparked a rally, so this is a relatively strong performance. So, let's look at the other 6 major categories, and most of them appear to be weaker. The points are all moving from the upper right to the lower left, which means it's weakening. In fact, it's not particularly strong. The only better one is utility, but public utilities are better. You probably know that coal-based systems are like power plants or something. Electricity is more important in nuclear energy now, but there's not much enthusiasm for it. Apart from nuclear power, there's not much enthusiasm for it. So let's talk about another thing. Among the 11 categories of the S&P, Zhiyun Technology is still the strongest. There are also some individual stocks. I'd like to report on Paramount Skydance. After Skydance acquired the old Paramount, it seems that they are still in talks with Warner Brothers. I don't know if it's a merger or a cooperation. So its stock has been very active so far. As for Eversource, I may need to look at the details. I haven't looked at it yet. AppLovin is the name of an app for mobile advertising, so it seems to be doing better recently. Why? Because in fact, in September, we enter the 4th quarter and advertising spending peaks, so this one is relatively strong. Additionally, Among the laggards are Deccan Medical, Cognizant Technology, and Kmina. Kmina is in healthcare, so you can see that both Deccan and Kmina are healthcare stocks, which means the healthcare sector is relatively weak. On the weekly chart, you can see the performance for your reference. Here, semiconductors are still relatively strong. The classification standard here has changed a bit. This is a more detailed classification, not the broader categories mentioned earlier, so just keep that in mind for reference. Why did I mention that last Friday, the market's attention and capital were drawn to the Magnificent Seven? Let's see. Last Friday, the Magnificent Seven index rose 1.24%, moving up nicely and continuing its upward trend. Surprisingly, Apple was the top performer, rising 3.2%. Tesla was up 2.21%, Microsoft gained 1.86%, and Google increased 1.07%. Nvidia and Amazon had small gains, while Meta, Facebook, was the only one that declined. So, the Magnificent Seven remain the main focus and are very important. The Nasdaq was, of course, also pulled up with them. I especially want to point out that, as of last Friday, U.S. stock indices are showing a classic steady upward trend, not huge jumps, but small rises and falls each day. This kind of steady climb is actually the best. There's a saying in the Taiwan stock market, it doesn't hit the daily limit, but it keeps rising every day. This is a similar concept. The benefit of this trend is that volatility is low, but the index keeps moving up. Even if there is a pullback, it doesn't go down much, which is actually a healthier structure for development. The Nasdaq 100 shows a similar pattern. However, the Philadelphia Semiconductor Index, SOX, was an exception last Friday. It corrected an unexpected weaker performance. Skyworks led the gains, and Cover was also up. Meanwhile, Rambus, a name you probably haven't heard in a long time. This DRAM company has been mentioned recently because DRAM prices have been going up, but the issue is that, including Micron, after a significant rise, they've all pulled back. I believe one reason for the pullback is still Micron. Micron is set to announce its earnings after Tuesday this week, so I think stocks that had risen a lot before are now pausing, waiting for the earnings report to come out before showing any clear direction. Intel dropped 3.24% in the semiconductor sector. As for the Dow Jones, it still went up on Friday. You can see its gains were a bit behind. The increase was not as steep as the Nasdaq or the semiconductor index, but it was still up, which is a good sign. The top gainers were Amgen, which is a pharmaceutical stock, along with Apple, Microsoft, and Johnson & Johnson, also a pharmaceutical stock. Salesforce, CRM, was up, and Visa, a financial company, also gained. The biggest losers were Nike, Chevron, and Walmart. Next, let us take a look at the current situation. Around 6 o'clock, the chart showed a drop of about 2% to 3%, but as we will see in a moment, the decline seems to have widened a bit. As for the individual gainers and losers, let's take a look at the actual screen from the trading platform. You can see here that things are narrowing a bit, but what's worse here? Sorry, let me switch the screen for a second. I accidentally opened something else. Looking here, the Dow is down 0.4%. Actually, the drop has widened a bit. The S&P Mini and Nasdaq Mini have come back up a little, because earlier when I checked, they were down more than 0.3%. So now they're being pushed down again a bit. Besides that, Let's take a look at some of the gainers. Teradyne was upgraded by a brokerage. Then there's Fox and Newsua. Fox refers to the Fox Corporation, which is considered as Trump concept stock. Basically, it's a company associated with Trump and his friends, so it seems to be benefiting from that connection and is performing well. Also, Newmont is a gold mining company, so with gold prices being strong lately, it's been doing well. Plus, it sold off a mine in Canada, which is a positive. Then there's Applied Materials. Looking further, Fexel has rebounded. LRCX, which should be Lam Research, is also related to semiconductors. Tesla is up as well, but the gains are relatively small. Now, looking at the decliners, let's take a look. Among the losers, there's a health food company that's down. As for Aston, I'm not sure, but it seems like it's related to a disease. They mentioned Tylenol, which is an anti-inflammatory drug that's well known in the US and also used in Taiwan. It might be their patent or brand, so it's a bit weaker here. Coin is reflecting the sharp drop in the cryptocurrency we talked about before. KLC is performing relatively weakly. Let's take a look at the others. In fact, the decline of individual stocks today seems to be heavier. However, among the full value stocks, JP Morgan is the largest, which should be the largest, so it has fallen relatively weakly. Humana is still very weak. It was weak last week and continued to be weak today. It seems that this performance is not a very good situation. TISD is also relatively weak, and Plain T has also fallen significantly. So we may see Oroco falling, which is quite surprising. Oroco should have a better performance later. The decline has narrowed again. So let's take a look at today. If we look at this development, it seems that today may be a small decline. After all, last Friday's rise was quite large. I think we will look at the focus of this week. The focus of the general manager will be on the numbers after Wednesday and Thursday, the numbers on Wednesday, Thursday, and Friday, and then the focus of the report should be only Micron, which is really more important. Others will have an impact, but it will be less. I think it depends on the performance of the stock market itself. In addition, are there any other technology stocks with new news that can be accumulated? Only then will there be a stronger rise. Otherwise, I think the probability of it fluctuating and rising slowly will be higher. Okay, next, let's take a look at everyone's questions. Okay, thank you. Okay, as for Bitcoin, we are paying attention to entering the market. Because this program is a public program, I may not be able to answer this. But I want to remind everyone that Bitcoin is a relatively volatile commodity. No matter what direction you go in or what method you use, I think you must pay attention to the management of your cash position. After all, the price is high now. If you don't manage your cash well, there will be a more negative situation. I can only remind everyone here. Okay, if there are no questions, then our live broadcast today ends here. Tomorrow, I will talk to you more about some discussions about individual stocks or sectors. We'll see you here again tomorrow. Bye-bye.
Our company has no improper financial interests in the individual securities recommended or analyzed. The information in this program is for reference only. Investors should make independent judgments, evaluate carefully, and bear their own investment risks. If you don't want to miss the latest market updates, be sure to turn on the notification bell and hit subscribe. In addition, we have plenty of great video content on both Facebook and YouTube. Don't miss out. In our group, we share in-depth explanations of global financial events with you every day.